Hello everyone, this is Tayyibatul Muntaha Naushin and my student ID is 2212336104. Today we are going to take a closer look at the monetary policy of Bangladesh, a crucial tool for managing the country's economy. We will cover a summary of the current policy, significant changes that have been implemented, the tools used by Bangladesh Bank, and finally some suggested policy reforms for a more stable and prosperous future. So let's begin with a summary of the current monetary policy. The primary objectives of Bangladesh Bank's monetary policy are to ensure price stability, that is to control inflation, while also supporting economic growth and a stable financial system. In recent times, the central bank has adopted a notably tight or contradictory stance. This is a deliberate strategy to combat persistent and high inflation, which has been a major challenge for the economy. The central bank's focus has been on curbing inflationary pressures and managing the country's balance of payments, which has been under significant stress due to factors like a widening trade deficit and falling foreign exchange reserves. The policy aims to achieve these goals by carefully managing the money supply and credit growth in the economy. This involves setting specific targets for things like broad money and private sector credit growth. Now, the significant changes compared to the previous policy. We can see the recent monetary policy statements have introduced some very significant changes moving away from previous approaches. First and foremost, there has been a major shift in the interest rate regime. Bangladesh Bank has moved from a managed interest rate system, which included caps on lending rates, to a more market-based approach. The old SMART formula has been scrapped. This means that lending rates are now determined more by market forces, which is a key step towards a more flexible and responsive financial system. Secondly, we have seen a major reform in the foreign exchange market. The central bank has transitioned from a managed exchange rate to a more flexible system, such as a crawling peg, and then a flexible exchange rate regime. The central bank has also reduced its direct intervention in the foreign exchange market, allowing the taka to depreciate more freely. This is a critical move to better reflect market dynamics, encourage formal remittance channels, and help stabilize the foreign exchange reserves. Thirdly, the central bank has moved from a monetary aggregate targeting framework to an interest rate corridor system. This is a more modern approach where the policy rate, that is the repo rate, becomes the primary operating target, with the standing lending facility, that is the SLF, and standing deposit facility, that is the SDF rates, forming the ceiling and floor of the corridor. This new framework provides a clearer signal to the market about the central bank's policy intentions. Now we will talk about the tools used by Bangladesh Bank. To implement these policies, Bangladesh Bank employs a number of key monetary tools. These are the instruments through which the central bank influences the money supply and credit conditions. So first of all, the policy rates. The most important tools are the policy rates, which include the repo rate and the reserve repo rate. The repo rate is the rate at which commercial banks borrow money from the central bank. By increasing the repo rate, the central bank makes borrowing more expensive for banks, which in turn leads to higher lending rates for businesses and consumers, thus curbing inflation. The reserve repo rate is the rate at which the central bank borrows from commercial banks, used to absorb excess liquidity from the system. The second one is standing facilities. The standing lending facility, that is the SLF, and standing deposit facility, that is the SDF, rates from the upper and lower bounds of the interest rate corridor. Banks can borrow from the central bank at the SLF rate and deposit surplus funds at the SDF rate. This system helps to keep the interbank money market rate with a predictable range. The third one is open market operations, that is the OMO. This involves the buying and selling of government securities like treasury bills and bonds by Bangladesh Bank in the open market. To tighten the money supply, the central bank sells these securities, withdrawing money from the banking system. To loosen the money supply, it buys securities, injecting money into the system. The last one is reserve requirements. These are the mandatory reserves that banks must hold with the central bank. The cash reserve requirements, that is the CRR, and the statutory liquidity ratio, that is the SLR, are two such requirements. By adjusting these ratios, the central bank can influence the amount of money available for banks to lend. Now we will talk about the suggested policy reforms. While recent reforms are a step in the right direction, these are several areas where further policy reforms could strengthen the economy and the financial sector. The first one is greater independence for Bangladesh Bank. One of the most frequently suggested reforms is to grant the central bank greater functional independence. This would allow it to make decisions based purely on macroeconomic stability, free from political influence, which is crucial for building credibility and effective policy implementation. The second one is addressing non-performing loans, that is the NPL. The high volume of non-performing loans in the banking sector is a major systematic risk. Effective reforms should include a robust bank resolution framework, more stringent loan classification and provisioning standards, and stronger legal mechanisms for loan recovery. The government and central bank need to accelerate their efforts to address this issue. Coordination between fiscal and monetary policy. For monetary policy to be truly effective, there needs to be better coordination with fiscal policy. The government's budget and spending decisions should be aligned with the central bank's goal to avoid conflicting policies that can lead to macroeconomic instability. The last one is enhanced data and transparency. Timely and reliable data is essential for effective policy making. Bangladesh Bank could improve its communication with the public and financial markets by enhancing data collection, analysis, and transparency around its decision-making processes. This would help build confidence in the central bank's action. Now we can see the summary, that is the repo rate is 10%, SLF 11.50%, SDF 8%, private credit growth 7.2%. Public credit growth is 20.4% and inflation target is more than 7%. In conclusion, we can say that Bangladesh Bank maintains contradictory stance to control inflation, focus on long-term stability and structural reform, and carefully policy calibration needed to balance growth and stability. So this is all about my presentation. Thank you everyone for connecting with me.